Sea Limited reported earnings on Monday and the stock gained about 10%, taking the market cap to $33 billion. With $5.3 billion of cash and $3.4 billion of debt, the enterprise value is $31.2 billion. And Sea also has roughly $4 billion of investments that it can access if necessary. Revenue over the last 12 months comes to just over $13 billion, with $163 million of net income and $1.2 billion of EBITDA. But to better understand Sea Limited, it's useful to look at the company's individual parts, because Sea Limited is made up of three businesses in one: e-commerce platform Shopee, finance platform SeaMoney, and video game developer Garena. Last year, Shopee brought in $9 billion of revenue with minus $214 million of adjusted EBITDA. SeaMoney brought in $1.8 billion of revenue with $550 million of adjusted EBITDA, and Garena brought in $2.2 billion of revenue with $921 million of adjusted EBITDA. In terms of growth, Shopee was up 24%, SeaMoney grew 44%, while Garena fell 44%. So you can see that Sea operates three very different businesses. Shopee brings in the most revenue, but it's also the least profitable. Garena has the highest margin, but it's seeing negative growth, while SeaMoney is the smallest, but it's also the fastest growing. One way to value Sea Limited then is to apply appropriate multiples for each business. Considering the low margins of Shopee, I think we can give that business a price to sales multiple of around 1.5, which would give that segment a market value of $13.5 billion. SeaMoney is growing rapidly, and I think we can give the business a conservative 25 times multiple to EBITDA, which is in line with fellow fintech business Block, so that works out to $13.8 billion, which just leaves Garena. It's worth noting that Candy Crush maker King sold for 6 times EBITDA, while Zynga went for nearly 20 times EBITDA. But considering its negative growth, I think we can value the business at around 10 times EBITDA, taking the value to around $9.2 billion. Adding up those three segments gets us to a sum of the parts valuation of $36.9 billion. So with an enterprise value of $31 billion, Sea Limited stock could be undervalued by around 18%. However, there are some risks to be aware of. Intense competition comes from the likes of Alibaba, Temu, Coupang, Tencent and Grab, and SeaMoney does expose the company to financial risks. Economic conditions have been fairly benign recently, but a change in the credit cycle could increase loan losses and hurt performance. And so Sea Limited probably does deserve a discount reflecting its exposure to emerging markets. But it's also worth noting that CEO Forrest Li gave an upbeat outlook. He thinks Garena can grow double digits next year and Shopee can grow in the high teens. So as long as economic conditions cooperate, Sea Limited stock can probably move higher from here. But these are my personal opinions, not financial advice, and I hold no position in the stock. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.